Welcome to Kansas Ag Report. I'm Ken Rogers. On the program, a conversation with Randy Blach, the CEO of CattleFax, kind of our annual get-together with him. We'll also have updates from the Kansas Soybean Commission, Kansas Department of Agriculture, and Kansas Grain Sorghum, plus the weekly update from the Kansas Livestock Association and market information from Pinion. Kansas Ag Report brought to you in part by the Kansas Soybean Commission, the Soybean Checkoff, progress powered by Kansas farmers. Kansas Farm Bureau, a grassroots ag organization representing the state's farm and ranch families since 1919, kfb.org. And the Kansas Wheat Commission, lending in the adoption of profitable innovations from wheat, online at kswheat.com. In agriculture information, the Farm Credit Administration's board received an update on economic issues affecting agriculture. The U.S. economy continuing to show modest growth for 2024. Gains in productivity are supporting real wage growth as well as boosting consumer spending. Now, for agriculture, there's a sharp divergence in returns for crop and livestock sectors that has become apparent as producers enter the new year of 2025. Cash grain farmers seeing lower returns with average incomes down sharply this year. In contrast, cattle and dairy farms are forecast to see strong income as lower feed costs benefit producers across the livestock sector. Now, those specialty commodity producers continue to be exposed to the fast-growing costs like labor as well as interest on their farm debt. Farmland values in most regions have been flat in real terms this year. Now, early indicators find increasing softness in farmland markets as values decline for low-quality land and the number of transactions continues to fall. Premiums for metro-adjacent farmland, though, have been on the rise. Well, the 2022 Census of Agriculture showed that the U.S. had over 1,900,487 farms. That's down a bit from 2012, representing a 10% drop, or some 208, almost 209,000 in 10 years. The Census of Ag is conducted every 5 years, and the last two 5-year periods saw a number of farms decrease in all four farm size categories from 2012 through 2017. Now, the smallest three categories fell from 2017 to 2022, and farms with annual revenue of less than $10,000 dropped the largest number within the decade, declining over 151,000 farms, or some 13%. Now, on the other hand, large farms with $1 million or more in revenue increased by 32%, from 81,600 in 2012 to almost 108,000 in 2022. The number of farms with $10,000 to $249,999 in revenue dropped by some 66,600. That's a 9% drop from 2012 to 2022. And farms with revenue of $250,000 to $999,999 declined by more than 16,800, or a 10% decrease. More coming up in a moment with Randy Blach from CattleFax. Stay with us. The Kansas Ag Report brought to you in part by Kansas Grain Sorghum, growers working together. Learn more at ksgrainsorghum.org. Grass and Grain, online or in the mail, keeping Kansas farmers informed for over 60 years. grassandgrain.com. Well, it's time once again for our annual conversation with Randy Blach, the CEO of CattleFax, who's at the KLA meeting in Manhattan now. I guess it's kind of our annual. How many years I know you've been coming, but it's always good to catch up with you. You always bring that market report, market update. Had a couple of things that were a little surprising this year.
Yeah, I think the markets in total were pretty much in line with what we would have anticipated. The one thing that I think was a little bit of a surprise to us was just the increase that we saw continue through the course of the year to where we're able to sustain cattle on feed numbers at as high levels as we did. I wouldn't have expected that. I would have expected that fed slaughter would have declined more than it did. We did see the decline in non-fed slaughter that we had forecast. We thought we would be down close to 1 million head in that category, and we were. The fed slaughter, there was a little bit of a surprise. So again, we've gone back, we've reanalyzed that. One of the things that we see is we're getting a little more contribution of that dairy influence supply. And again, there's a lot of parts of that. You know, you've got a significant reduction in the number of animals that go into veal slaughter on an annual basis. We've had a very difficult time in the dairy industry through the middle of this year. The previous 18 months, margins were non-existent. They just couldn't make any money. So when those margins were poor, that gave us an opportunity to have a few more of those animals that moved into the beef production system as beef dairy crosses. So, and of course, sex semen plays a role as we use that within the dairy industry as well. So bottom line is we ended up with a few more dairy influenced animals than what we would have anticipated.
I think you and I have talked about that over the last couple of years, thinking that it may come, but would it? And it has arrived. So where is that moving forward then?
Well, I think the thing that I would emphasize there is keep in mind, since the cattle inventory peaked in 1975, as we've come through each of the cattle cycles since then. So we had the 70s, the 80s, the 90s, the 2000s. Now we're in the present cycle. In every one of those cycles, the beef cow number has failed to take out the previous high in numbers. So demand for beef is at a 35-year high. So when demand is that strong, we need to make sure that we can put an adequate supply of high quality beef in front of our consumers on a daily, weekly, and annual basis. And I think that's something that the beef dairy cross animals can help us do. They have tremendous carcass characteristics. These animals are bred to high-end Angus bulls, some composite bulls, different breeds, but the bottom line of them, there's a lot of them that would have an English influence in them. So we're putting a lot of muscle, we're putting a lot of meat, and we're putting a lot of quality in those animals. So it fits in very, very nicely for that upper end market that we're trying to produce more animals for. So this year, I think just for everybody's information, if you think about it, about 83% of our total supply was choice and prime this year. And this is 3 or 4 years in a row, 82 to 84% of our total supply has been choice or prime. And a much higher percentage of that is upper 2/3 choice and prime. And that's what the market's really been demanding. So we're finding a way to utilize an animal that actually can contribute to our overall supply needs within the industry. And I think that's a supply that will be there for us 10, 20 years down the road.
Randy Blach, the CEO of CattleFax, is joining us. Let's take a break. We'll have more coming up in just a moment. Kansas Ag Report brought to you in part by the Kansas Livestock Association, supporting members' business interests and meeting consumer demands. KLA.org. Oldie Seed Farms, carrying soil-specific seed. Find them on the web at oldieseed.com. That's OHLDE seed.com. And Kansas Corn, building the future at kansascorn.com. And Randy Blach, the CEO of CattleFax, joins us, kind of our annual get-together when he comes back to the KLA meeting. We're in Manhattan this year, by the way. All right, we always like to talk about the next year, look at that crystal ball. It looks like this is one of the first times, Randy, I think that we can maybe see a little more clarity. How many years have we been talking about this cattle cycle and maybe a turnaround? But I would guess, like you, when producers talk to me, they hear this about retention. They say, well, we believe it when I see it. Where are we at with retention of holding back some of these females? And is it time, or are we still a ways off?
Well, I think that's really twofold. There's two pieces of that. There's two ways that we can expand the nation's cow herd. One is the slow harvest levels on beef cows, and the other is to retain heifers. So we've seen the first leg of that change. We've seen a significant reduction in beef cow slaughter. And in fact, we think January 1 of 2025 will be the low in beef cow numbers. So that should be the start of it. That should be the low in beef cow numbers, as long as drought doesn't, upset that plan going forward. We should also start to see a little more heifer retention show up in 2025. Again, we've got the profitability signal. What we haven't had is the moisture situation, whether it's stock water or grazing water, to have forages. So that looks like enough more of the country is in, I wouldn't say great shape, but maybe a little bit better shape in total. So I think we'll start to see a slow retention of heifers kick in, and we should start to see that in heifer placements as we get into the spring, particularly the second quarter of the year is where that'll be probably more visible, because still about 75% of the nation's cow herd is a spring calving cow herd. So, we get into that April, May, June windows when we start turning the bulls out, and so it should become more prevalent.
As we look at 2025, we know from an input standpoint, USDA and others and private sources are saying we're going to have more corn acres. So if we do that, corn price probably will not be that strong. Be good to put that major input in for those cattle. If demand continues to stay strong, because we have a new administration with maybe some new attitudes, maybe new way to trade some things. Are you a little more bullish, maybe looking at 2025?
Well, I think if we look at the feedstuffs, if we look at that side of it, I'd start there. I would just say, remember the grain market cycle too. And we went from grain prices broke out to the top side in the summer of 2020. And they were elevated in 2020, 21, 22, 23. The transition was late 23 into 2024. So we had about a 4-year window in there that was a much more profitable time period for grain producers. Now we've cycled back down, and typically when we cycle back down, we go through 3 or 4 years in this stage of it. So I would just say, when I look at the overall supply side, is the supply data, not only domestically but globally, tells me that we'll likely keep grain prices in the lower end of the trading range. Again, if you look at the last 15 years, grain prices will typically range from about $3.50 to about $8.50. I think our price levels for futures in 2025 will be from the high threes to up around 5. I don't expect we'll spend much time above $5 corn on the futures. Now, all areas you have to adjust for basis, and we know we've seen strong basis levels over the course of the last several years. So bottom line is I think grain and forage prices are going to be more range bound down in here at the lower end of the range. Cattle prices, on the other hand, we're going to be on the upper end of the range. So again, there hasn't been very many times in the history of our industry that the cost to put on a pound of gain is as much below the value of fed cattle that we are seeing today. So, i.e., that's why we've made cattle big. And that's going to continue to be the case in 2025. We're going to make cattle big because of that cost to gain spread.
All right, very good, Randy. Anything else we need to know?
Well, I think the biggest, most important thing is people need to understand demand, how good demand has been. I mean, you look at the last 20 years worth of data, and beef demand is excellent. You look at the last 30 to 35 years with where beef demand will end 2024, will be at the second highest level in beef demand in 30 plus years. The second highest level. The only year it was higher was when we were in 21 and we had all those COVID dollars. So again, we have to understand why. Why is that happening? It's a function of the quality of product and the consistency of product that we're putting out on a regular basis. Consumers are responding to that. They like what decisions producers are making, the quality of product they're delivering, and the promise around that product that they get day in and day out. So congratulations to each and every one of you producers that have made decisions that have moved the needle in here, and we're doing a better job of giving the consumer what they want.
Right. Randy Blach, the CEO of CattleFax, has joined us. We'll take a break, have more coming up in just a moment. Stay with us.
What if U.S. soybean meal were more than a commodity? If seed companies and the soybean checkoff built a better variety? That future is here. The time is now. To meet end-user demands, the soybean checkoff is investing in the compositional quality of soybeans, including meal. A message from the Kansas Soybean Commission, the Soybean Checkoff, progress powered by Kansas farmers.
Save the date for Kansas Soybean's inaugural celebratory event coming to Salina January 31st. Kansas Soybean Celebration is a brand new event aimed at recognizing good news in agriculture and the soybean industry, and it's strategically aligned with the Kansas Commodity Classic and Kansas Corn Symposium to round out 2 days of must-have industry knowledge for growers. Many will remember the annual Kansas Soybean Expo that took place early January in Topeka. After years of deliberate discussion on modernizing outreach efforts and better aligning grower events, the Kansas Soybean Association Board decided to transition away from Expo and introduce Celebration. Kansas Soybean Celebration follows Kansas Commodity Classic at Salina's Hilton Garden Inn. The KSA Annual Member Meeting begins at 2:30 p.m. in the hotel dining area, followed by a social hour and networking with corporate sponsors and agronomic researchers. Celebration begins at 4:30 p.m. and features numerous food stations and continued conversation. A program of awards, organizational updates, and a featured speaker comprise the evening's agenda. The Kansas Soybean Expo historically recognized KSA's Friend of Soy and Meritorious Service recipients, honored farmer leaders retiring from service, and shared results of the Kansas Soybean Yield and Value Contests. These awards are now slated for presentation at Celebration. Registration is open. Visit www.kansassoybeans.org/celebration to get the details. Through the registration link, individuals may also register for Classic and Symposium. Join us as we reign in a new year in a new, upbeat way. See you at the Kansas Soybean Celebration.
What does a brighter, more sustainable future look like in our cities and towns, and how do we get there? When New York needed an alternative fuel source to reduce carbon emissions, the city found what it needed in biodiesel made from U.S. soybean oil.
Time for another Kansas Sorghum Harvest Update. I'm Maddie Meyer, Director of Communications and Outreach for the Kansas Grain Sorghum Commission. Today, I'm joined by Clark Bibb, our at-large commissioner from Coldwater.
We farm in Comanche County and Caldwell County, southeast of Dodge City. And we usually plant about 18 to 2,500 acres of milo every year. We've been harvesting some early planted milo, and it's not been just real super, maybe a little bit below average, but way better than it was in the last couple of years because of the drought. But our late planted sorghum looks like it could be really good, and I think some guys around have had some good yields, but the 50 bushel range, I think, is more than likely the going average in our country. I noticed that the local cooperatives got had to start going to the ground with monos because they ran out of storage. So that's always a good sign. I was surprised some of our late planted was really late planted, and we kind of had a little earlier frost here than usual, but it seems like it went ahead and matured, and it's going to be a good crop.
Grain sorghum is one of the most important cereal crops worldwide, and Kansas leads the nation in its production. Over the years, sorghum has been either exported, used in animal feed domestically, or for other industrial uses. Recently, its use in the ethanol market has seen tremendous growth, with 30% of domestic sorghum typically going to ethanol production. Kansas Grain Sorghum is committed to sorghum research, market development, and education. Learn more at ksgrainsorghum.org.
Looking back on 2024, the team at the Kansas Department of Agriculture wants to express our appreciation to you, the farmers, ranchers, agribusiness owners, and leaders across the Kansas agriculture industry. We are proud to serve you and to advocate for you here in Kansas and throughout the nation and the world. I'm Heather Lansdowne, Director of Communications at the Kansas Department of Agriculture, and I have appreciated this opportunity to share information about KDA with you throughout the past year. 2024 has again been a busy time for Kansas agriculture and for KDA. Early in the year, we responded to the confirmation of avian influenza in livestock in the U.S., including in 4 dairies in Kansas. Fortunately, HPAI slowed during the summer and fall in Kansas, although fall migration increases the risk again. This year, we kicked off a program that is providing $6.46 million in grants for extended capacity across the middle of the food supply chain. The KDA Animal Health team hosted regional animal health workshops in 8 communities across the state this summer, talking about critical topics related to the livestock industry. KDA staff were also active in hosting the water consult meetings across the state to provide input on solutions to water issues facing Kansas. And the highlight of the year for KDA's communications staff was the launch of our new KDA website in June. We continue to expand and develop this new design, which is focused on being more user-friendly for you as you seek the resources you need on our website. Many other topics have kept the Kansas Department of Agriculture team busy this year, including issues in pet animal facilities, conservation, pesticide licensing, and dam safety. We look forward to many more opportunities to work together with all of you in 2025 as we share our dedication to Kansas agriculture.
Many seed companies claim to offer the latest genetics, but how many have tested those genetics in soils just like yours? The Oldie Seed Know to Grow research program has fully tested the latest seed genetics in soils that are right in your neighborhood. The Oldie Seed Know to Grow program can recommend the best performing hybrids from technologies like Enlist, Extend, and Liberty Link that will optimize the yield and profit of every acre on your farm. Contact Oldie Seed today.
The Federal Disaster Tax Relief Act was signed into law December 12th. In addition to providing relief to those affected by hurricanes, this legislation will benefit cattle producers who received payments due to wildfires. Previously, these payments counted as taxable income, meaning producers who already suffered from disasters were negatively impacted again by having their relief payments taxed. NCBA president and Wyoming rancher Mark Isley said it is heartbreaking to see your farm or ranch destroyed by a disaster, and it only adds to the pain when the payments meant to help you recover come with a tax bill. The Federal Disaster Tax Relief Act addresses limitations in casualty losses and allows producers to take greater deductions for disaster-related losses. It also excludes any payments received due to a qualified wildfire disaster from being counted as income for federal tax purposes. The bill retroactively applies to any wildfire payments received in tax years 2020 through 2025. Producers will have the opportunity to file with the Internal Revenue Service for relief payments received in those previous years. The House passed the Federal Disaster Tax Relief Act earlier this year, and the Senate passed it in early December, just prior to President Joe Biden signing it into law.
Imagine turning soybean oil, used cooking oils, and waste animal fats into fuel so amazing it drives U.S. jobs and our economy forward. Learn more about biodiesel at americasadvancedbiofuel.com.
Good afternoon, everyone. This is Aaron with Pinion Ag here to talk about the ag markets. Corn seems to be in a critical place at the moment, with corn trying and failing to break through resistance around 450. This week's USDA report had a reduction in U.S. carryout, taking us from 1.838 billion bushels down to 1.738 billion bushels, based on a 50 million bushel increase in use for ethanol and 150 million bushel increase in exports. This is also below the 1.76 billion bushel carryout we saw last year at this time. We did see positive reaction initially from the markets, but that pesky resistance has kept the market from continuing to push to the upside. For the most part, there is little news out of South America. There are some small pockets of flooding in Brazil and a few dry spots in Argentina, but not enough to say they don't have good conditions. Soybeans have been pretty sleepy as of late, with January contracts trading in a tight 39-cent range since the middle of October. Not a whole lot of fresh news for the soybeans, though this week's export numbers came in below expectations at 43 million bushels, bringing year-to-date commitments at 1.37 billion bushels, still up 12% from a year ago. People are awaiting the administration change so they can have some clarity on what potential tariffs will look like, as well as clarity on possible new biofuel policy. Wheat seems to be a corn follower at this point. While still early for weather markets in the wheat, things do seem to be going fairly well. Midwest wheat, for the most part, was planted into moisture and have a good stand going into the snowy season. There are some dry areas in Montana, the Dakotas, and part of Nebraska, but for the most part, conditions have been cooperative for the wheat. There are some rumors that Russia may be limiting wheat exports, which would be supportive if it weren't for the fact that Russian producers are contemplating an increase in wheat acres. If you have any questions or would like to talk with us about your marketing, please give us a call at 888-452-8751. Thank you and have a great day.
Kansas Corn reminds you that E15 fuel is the right choice for every kind of driver. For the car enthusiast, E15 has higher octane. For the thrifty driver, E15 is priced lower than regular unleaded. For the nature lover, E15 provides cleaner air. For the shopper who buys local, E15 has more ethanol from our Kansas corn farms. Choose E15 for a higher octane, lower price, cleaner American fuel. Message from the Kansas Corn Commission. Learn more at kscorn.com.
That's our program this week. Be social with us online, kansasagreport.net, or our social media channels. You can also find past programs on the Kansas Ag Report YouTube channel. Thanks for watching. I'm Ken Rogers. From all of us at the Kansas Ag Report, Merry Christmas.
What does a brighter, more sustainable future look like in our cities and towns, and how do we get there? When New York needed an alternative fuel source to reduce carbon emissions, the city found what it needed in biodiesel made from U.S. soybean oil.